How many of you guys realize that if you're the investor, the sponsor, and you have access to another $10 million, that enhances your buying power significantly? All right. Now, I know that my attorney yesterday had some of you guys spinning on Red D, like the private placement sector. Would you guys agree? Are some of you a little bit confused about some of those laws, or they're kind of confusing and you're trying to figure out what's going on? What I'm going to do right now is I'm going to show you how to get investors, but more importantly, what I'm going to do first, so that you will understand the finding investors first, I'm going to show you how to structure the financing of the deal. Okay? Yeah. Now, the joint venture is very simple. I'll explain it. I have a lot of contacts that have actually come to an event like this and said, you know what? I like to network. I'm a good mover and shaker. I have people who have money, and instead of me having to do all this operation, how about I joint venture with you, bring some investors, and together we make some profits. We do joint ventures, so if you're interested, let me know. We also have other investors who are already doing deals, and we sit down, have meetings, and we discuss how we can work together in a synergistic partnership. I'm always open for that, especially somebody who's already performing and doing deals. So I'm always open to coming down, flying here, sitting down with somebody. We find a way to make a win-win, we'll do it. Okay, so that is just sowing a seed for those of you who are at that level. But here's the real thing. Joint ventures are more geared towards shorter-term relationships. They tie you up because it's based on a one-investor scenario. Now, you might put 2 or 3 investors in one deal on a smaller scale, but anytime you do that, you run the risk of calling that joint venture now by the SEC an actual private placement. And the moment they call those joint ventures a private placement, the problem is you have already violated the Reg P laws, because that joint venture was not written like a private placement. You guys follow me? Mm-hmm. So, for us, and this may be the same thing for you, we utilize the joint venture as a dating service to court our investors, build that relationship of trust. Once we've made the money, and I've got proof because I've got HUD-1s of transactions we've done, then I talk to the client about diversifying their funds into an actual investment platform called a private placement memorandum. Now, I asked my attorney to have your head spin, because if you don't actually realize, first of all, that you should be very careful in doing a private placement and recognize the actual dangers behind it, then you're kind of like, I'll just buy a template online. I found one for $1,500, right? The reality is you can buy a template for $1,500, but watch what happens when you violate those laws that you didn't know. So I wanted to give you just the scope of how bad it is. It could be very bad for you if you do not for property. So you definitely want an attorney. This is why we have an attorney to put together a private placement. Now, I want to simplify things for you, because he started talking about 504, 505, 506, and then there's another law called 1314. Remember that? And it was kind of just your head spinning. Here's the best way to do a scenario. When you are buying an individual asset, let's say we're buying a small 6-story office building. All right? If we're going to raise only $1 million to purchase that property, that would fall under the Reg D 504. Because under 504, you can raise up to $1 million in equity, and it has restrictions of how you invest that money. So the reason why the government wants to actually create these laws is because they want to protect the public.